I'm going to go very quickly because I have a lot of things to discuss. And I'm going to be speaking about Globex Mining Enterprises, which is a mineral property bank. So when I'm talking, I would appreciate if you would focus on the value, because Globex is a different kind of company. And the value is really hard to define for a lot of reasons. Number one, because of the number of assets we have, because of the diversity, and because on our books, in order to save auditing fees, we mark everything as zero value, even things with mineral deposits. So talking about the company, basically, I said that we were diversified. So we have a lot of precious metals and base metals, as well as specialty metals and minerals. In the specialty minerals and metals, we have things like uranium, antimony, manganese, bismuth, scandium, and so on. We are not married to any particular element, although we have mainly gold. I'd say about 65% of our assets are gold assets, but we cover half of the periodic table as well as industrial minerals. So we're diversified. We only work in areas of low political risk, Eastern Canada principally, Saxony, Germany, and the US, and particularly Nevada and Arizona. And we make money, which is a bit of a different model for the junior mining sector. We make money from options and sales of projects. We have one joint venture, and then we have over 105 royalties. Currently, we have about $25 million in cash and marketable securities in the company and no debt. So we view the company as a mineral property bank or an incubator. We specialize in acquisitions, and then when we get the assets, we upgrade them through limited exploration and intellectual input. And then we generate revenues, as I indicated, from option sales and royalties. We have income. That really sets us apart from almost all the other junior companies. And because we have income, this makes for less shareholder dilution, increased exploration expenditures by our partners, and less exploration risk for us, and we avoid debt, while at the same time increasing the property portfolio value. This is a slide just to show you how we've been building up the asset base of Globex. Currently, we have 252, actually it's now 253 as of yesterday, projects, of which 106 are royalties. And you can see how we've been steadily building up the asset base over time. So the basics of the company, 56 million shares out. The company was listed originally in 1987. We have never done a rollback. 56 million shares with no rollback, fully diluted, 57.7. The management, principally myself, we have 13.08% of the shares. The board of directors is a bit different. No doctors, no lawyers, 3 senior geologists, a mining accountant, and a senior finance professional. The other thing that's different about us is we're on the senior Toronto Stock Exchange, as well as in the Frankfurt Exchange and a number of other exchanges in Germany. And we're on the OTCQX International in the US by invitation. Just quickly about our directors. I'm an accredited director and a professional geologist. Ian Atkinson, lots of high-end experience, also a geologist. Hans van Hoof, a financial professional. He was chairman and senior executive officer of the Soros Funds. Diane, who is my wife, who's an accredited director, and for over 30 years was CFO and corporate secretary of the company. And she worked for over 18 years for Noranda Mines. And Chris Bryan, who's a retired geologist and mining analyst, who is a portfolio manager for Caisse de dépôt et placement Québec, one of the largest investment funds in Canada. So the breakdown of our projects, as we said, 252 projects, 126 are precious metals, 68 are base metals or polymetallic, principally copper, zinc, but also lead, nickel, and with secondary credits of gold and silver. And then specialty metals and minerals, you can see the list of some of the things that we have. We also have 106 royalties as part of that 252 projects. We have 13 active options. The basic structures of our active options are that companies want to earn an interest in a project. We do, say, for example, a 4-year deal. We get cash payments each year. We get share payments of the other company every year. They undertake exploration or development expenditures from their budget. And if they earn the interest, we end up with a gross metal royalty. Now, a gross metal royalty is a bit different than net smelter in that it is the percentage of the metal. So, for example, if we have a 3% gross metal royalty and there are 100 ounces of gold produced, we get 3 ounces. So it's a completely different way, means less need to deal with lawyers. Of our projects, 58 have historical or NI 43-101 resources. Distribution of our projects. This is the large map, is the Abitibi of Quebec and Ontario. This black line here is gold localizing Cadillac break. This is the Porcupine Destor break. And then we have the Joutel mining camp, the Chibougamau mining camp, Rouyn-Noranda mining camp, Val-d'Or mining camp. And you can see the distribution of our properties. All those yellow stars or gold color stars are precious metal properties. The blue are base metal projects or critical mineral projects with critical minerals. The red stars are critical mineral projects solely, for example, down here in the south. And then the green diamond-shaped are industrial minerals. If you go outside Quebec, up in the top left, the white area is the Abitibi map. You can see we have lots of projects in the rest of Quebec, as well as Gaspé, New Brunswick, and Nova Scotia, as well as a series of projects in Nevada, Arizona, and Washington State, and we have a number in Saskatchewan. So what do we look for when we acquire property? We look for projects that are historical or NI 43-101 resources, drill intersections of economic interest, past production, mineralized showings or drill targets. They can be geophysical, geochemical, geological, and so on. And we also want to be on gold localizing or base metal localizing structures or in prolific mining camps. So we're a bit different. We're not interested in pure exploration generally, although we do have a number of such projects. Just to show you some of the more recent acquisitions, the Francoeur Ironfield Mines property, a whole number of series of former producers, Montalabert, high-grade visible gold on surface. Eldridge, this is something we just acquired recently with the trade with IM Gold, a former gold producer, very close to Rouyn-Noranda. Uranium in Quebec, we've done a number of deals with Australian companies. Virgin Mountain, which is a rare earth project in Arizona, as well as we have a number of rare earth projects in Quebec. Antimony has become very interesting lately, because the price has gone up because China has stopped export and they're the largest producer of antimony. We have 2 high-end antimony projects. We have optioned one of them out under our deal structure with cash payments, work requirements, shares, and so on, with us keeping a royalty. And then we have one other one where we have up to 53% antimony. In case you don't know, that's extremely high grade. That's on surface. It has not been drilled. And there's also a gold deposit on the property of about 100,000 ounces, multiple other showings, and that gold zone still needs to be drilled. We also recently picked up 14 kilometers of the Porcupine Destor break. That's one of the premier gold horizons in the Abitibi. And there's numerous intersections of gold values on that property. And then we have some odd things like scandium, which is used to alloy with aluminum to make it so that you can actually weld aluminum. So just to go through some of the projects, this is a project that we did with, we spent about $2 million. We acquired the project over years. This is the Francoeur project. And We did stripping, we did some drilling, we redid the geology, and then we did a deal with what is now Agnico Eagle for $15 million and a 2% gross overriding royalty. So we've received 12 million so far. In 2025, we receive another 3 million, and they're carrying the project forward. We've got lots of good values on this particular project. I'm going to be going, like I said, going through this stuff very, very quickly. This is the Joutel mining camp. There's 4 gold or base metal deposits in the camp. We own 3. So we've done a deal on the Eagle mine over here. That is with the Eagle mine is it's in a joint venture with a company called Maple. And then over here, we have this in blue here and here. That is a joint venture, or an option, sorry, with Orford, which now became Alamos. So we have revenue from those deals coming in each year. We also have the Joutel copper mine and the polymetallic Poirier mine. And recently we acquired this ground, which is on strike of this horizon, which has the Eagle and the Tellbell mines. And you can see this is an area that we want to drill or do a deal with someone and have them drill. We think it is tremendous potential. Another deal, this is a deal that we've done. We've been paid up completely. This project is with the company called Labyrinth, which is an Australian company. We received all the cash payments, all the share payments. The project has a resource already. There's also underground access on 3 levels. You can see some of the values. These are in ounces, 1.4 ounces, 0.45 ounces, 0.82 ounces. It's high grade drill intersections and underground sampling, tremendous values on it. They're working the property. We have retained a 5% gross metal royalty on the first 25,000 ounces and a 3% gross metal royalty on all the other ounces that can be produced. So this is quite an advanced project. Like I said, underground, there's already resource and underground access. This is a lithium project up in the James Bay area, northern Quebec. We acquired the area shown and the blue rectangles. We did a deal with Brunswick. It was a 5-year deal, but after the first couple months, with what they found on surface, they paid us the entire 5 years up front. And starting in the 5th year of the option, we will start receiving $100,000 a year advance royalty payment. So we've done a deal with them, but not only did we option the area of our claims, but also we got an area of influence. You can see the dashed lines. And they've been doing drilling on the projects, particularly in this area over here, and getting very, very wide intersections. Some of the results you can see there, 16 meters at 2.75, 10.6 meters at 1.48, and so on. They put out a press release last week. They got up to 40 meters wide of good intersections. So, a very, very good project. They're carrying it forward. This is a small royalty. It's only a 0.5% gross metal royalty. But there's already 17 million tons indicated and inferred, over 1% lithium, and it is near a mill, which the company Sayona, again, another Australian company, have already outlined 100 million tons, and they intend to mine this. They've done what's called the BAP, public consultations, and they want to put this into production as feed for their deposit mill. Now, this is a large land position in the Chibougamau area, which is another mining camp. And what we did here, all these properties used to belong to Globex. And what we did is we optioned them off to, sorry, we didn't option it, we spun it off to our shareholders, share for share. And Globex kept a royalty, a 2% gross metal royalty. And we have an option now, the company Chibougamau, this area here is going to be drilled, particularly the area over here where there's excellent, I'll show you some of the values, zinc, gold, and silver. We've been approached by a company that's interested in working with us on this area here. which is the main mining camp. We have half the mining camp. Then over here, I'll touch on it in a minute, but is a large open pit iron formation. And it's over 1 billion tons of open pit magnetite, high grade, beautiful deposit. We have a 1% gross overriding royalty on that. If you look at it, here's the one area zone. This is the other area. Both of those will be mined by open pit. The project has a net present value of $1.6 billion. Net that after post-tax payback is 1.8 years. Post-tax IRR is 43%. So we just sit back. The other company is doing all the expenditures. I mentioned the other project on the west side where a company is called Tama Gold is going to be drilling. This project, this just shows you, I'm showing you this slide because it shows how we go into areas where other people may have overlooked things or things are time sensitive. This project was, these are some drill results that were based on exploring for zinc. They even did an adit testing for the zinc, but look at the gold values. And they, at the time, they didn't care about the gold. 49 grams, 36 grams, 32 grams, 37 grams, 17 grams. Go to silver, up to 404 grams. This now, instead of being a zinc property, is a gold silver property. So that's the kind of things that we look for, hidden value. In that same area, again, this is something we have a 2% gross metal royalty on. Chibougamau, which we're managing, went and found surface values over here in copper and gold. Chibougamau did drilling down to 450 meters. You can see some of the values, 2.49% copper, 4.24 grams gold over 9.25 meters, plus 4.14% copper, 0.55 grams gold over 5.5 meters, the hole directly above it, 7.7% copper, 3.58 grams gold over 9.2 meters. Lots of depth potential, parallel horizons. We sit back, Chibougamau does the work, and we hopefully will retain a good royalty on that property in the series of payments. This is a project that we bought from IAMGOLD. This project is on the Cadillac break, which is that dashed line. You can see over here off the property, there's two deposits, the Hava and the Hava West. All these green circles are drill holes. And you can see when it got to the boundary here, very few drill holes, but lots of gold intersections there. Then gold intersections over here, and then a gold deposit over here. And there's an inclined shaft and 4 levels on that. We went and we've done a whole bunch of mapping and surface sampling over here. We've applied for a drill permit. We intend to drill because we think that we've unraveled the geology and the potential in this area. So we own this 100%. We're carrying it forward. One of the things I would also mention in this area, Hava and actually Hosco, which is over here, we have a royalty on that also, and that's all owned by Hecla. Another project, Magusi Fabi Bay. This is a polymetallic project, very large, 15 kilometers by 4.5 kilometers. High copper, zinc, silver, and a bit of gold. We have a tentative agreement with the company. There's already 1.6 million tons outlined in the Magusi area. They want to go underground on it and put it into production. Again, just staking. We acquired a property by staking. It had historical values that are over here, for example, 123 meters of 20.8 grams cut, 28.9 grams uncut gold right on surface. You can see some of the values that we got when we went in and resampled, 510 grams, 118 grams, 108 grams, and so on. And then there was this area over here that was a bit more gold values. This got stripped. We got up to 3,310 grams over a meter on surface. Another sample, 90, that's equal to 96 ounces. Over here, 84 grams, 64 grams, nice high grade information. You can see here's a sample from this channel sample, and you can see the gold speckled throughout the sample. This is a grab sample on surface, and you can see gold sticking right out of the rock. This is a longitudinal sketch of a property that we have a royalty on. We purchased this royalty for $50,000 a number of years ago. This is on a property being explored by Radisson. These are gold zones, which are going to depth to the southeast. They've been drilling, hitting all kinds of values. We sit back, they do the expenditure, and we have a 2% net smelter on this project as they carry it forward. That area is over here. This is on the Cadillac break. We also own this area over here, which we call the Wood property, or the Wood Central Cadillac property. And we have a zone on there called the Ironwood. Small, only 240,000 tons, but it's running 17 grams, a half an ounce. And we're starting a drill program, an infill drill program, soon as hunting season is over. And we're looking to upgrade the resource. So not only do we have this area with two former producers, this area that we're going to drill, a 2% net smelter here, but also on the Radisson ground, the new Alger property, we have a 1% net smelter. This is on the Porcupine Destar property. We optioned this property out to a company called Emperor Metals. It's a five-year deal, 10 million in cash, 15 million shares, 12 million in work. And if they earn their interest, we end up with a 3% gross metal royalty. There's already uncut 853,000 ounces of gold uncut on that property. But that was done at $960 US. So with a new resource calculation, should be a hell of a lot higher. They're drilling it, looking for lower grade open pittable. This work was done looking for underground, high grade. This is that property I mentioned along the Porcupine Destar break. It sits this is the Ontario border. The Harker Holloway gold mines are over here. Duparquet gold mines are over here. Lots of drilling along it, lots of gold values. We own this 100% now. One in Ontario, very large property, one area of particular interest. There's 270,000 tons open pittable, 41,000 ounces just in this little area here. The resource, historical resource, 720,000 tons, and a lot of place to expand it, as well as a large property. This is the Scandium property, just showing one of our more oddball things. A company called Scandium Limited is working over here. They have a deposit that they're looking to carry forward to production. The scandium is in this oval structure. We have half the structure, numerous showings of scandium and rare earths. As for Germany, this is the property that we have in Saxony. It's a 35 kilometer long project by 5 kilometers. We optioned it and the company now has earned their interest. We have a 3% gross metal royalty on silver and gold and a 2.5 gross metal royalty on all other metals. This is a silver area. From historical work, we can see that there was about $500 million in silver produced over a 750-year pick and shovel mining method extraction. You can see these are the various areas where work has been ongoing and values intersect. And now this presentation is on our website if you want to take a look at more detail. So again, just in summary, I'd like you to focus on the value. I've only touched on a very minor amount of things that we have. Things to note, we have very few shares out, an experienced geological board. We have income from royalties and options. That's really different from other companies. We own our properties. Okay, we own our office buildings, we own our vehicles, we own everything. We have no debt. We only work in areas of low political risk. And again, our board of directors, senior people in the mining industry. Thank you very much. That's it.
Well, thank you very much for the presentation, Jack. You are used to how we work here. So we're going to do a Q&A session of 4 minutes. If everyone has additional question than the one posted, please go on right now. One of the things that I would like to put in phases on, and something you were talking about, Jack, is basically revenues. So can you guide us a bit more into the projected revenues within year end, so for 2024, and maybe if you do have guidance or not for 2025, but just give us a little peek into the near future.
Okay, sure. Well, the basic thing, first of all, is to reiterate, we have about $25 million already half in cash and half in shares of other companies. We have no debt. As far as revenue concerned, and these are projections, but we're well on the way to it, probably in the range of $5 million in revenue this year, and probably similar next year. So it's possible it can go much higher, depending on the number of deals and the interest of the market in various properties. But I'm very, very confident at least 5 million this year and 5 million next year.
Okay, this is great. And when we are looking at that, what are your yearly costs? Does that cover G&A? Does that cover G&A plus licenses? What does it look like?
Our costs, it varies depending on how much we work.
Yeah.
Our costs per year vary from 2.5 to 3 max in expenditures. Most of it is maintaining properties either by exploration, drilling or geochemistry or airborne surveys, and paying taxes, because you have to pay taxes every 2 years on your assets. We have 12 full-time staff, but their costs are part of the costs of exploration expenditures.
Okay, perfect. And one thing is sure, we saw the raise in the price of gold. Copper isn't doing bad either, and so on. So how does the commodity prices have affected your business, maybe the value or the interest of your projects?
Well, the value and the interest rises obviously with the metal prices. For example, nobody was interested in antimony 3 or 4 years ago when we picked up the antimony. They're antimony gold projects, but nobody was interested in antimony. As soon as China cut off the distribution of antimony, we got calls about our antimony project, and we did a deal on one of them, revenue coming in from that, and we're going to be talking to someone about a deal on our second one. Copper, same thing. All of a sudden, the copper price is starting to go up more gradually. We're getting calls about copper. I just got one last night from Australia. Gold, always there's interest. It fluctuates, but we're always doing deals on gold. So, you know, our business model is kind of odd. Good markets are great when the metal prices go up, because that means that we can do deals and generate revenue. Bad markets are great because it means we can pick up properties very cheaply from other companies that are in distress. So I'm pretty much a happy camper all the time.
So basically, as one famous investor once said, buy low, sell high.
Absolutely correct. Yes.
All right. And then one question from Andrew here. Do you think you will sell ironwood or mine it yourself? And will the infill drilling potentially affect this decision?
Yes and yes. Yeah, we're doing the infill drilling. We want to upgrade the deposit. We're already in discussion with a company called Nova Mera, which have a mining method called surgical mining, which is mining with large diameter drill holes, anywhere from 1 meter to 3.5 meters in diameter, and very low cost, extremely low cost. They've looked at it. They think they can do it. We're doing the infill to better define the deposit. Then we're going to sit down with them and see if we can do a deal.
Perfect. This sounds great. Well, Jack, it is right now 3:30, so that comes to an end for our presentation. But thank you as usual, and we're very happy to have you here. And we'll be continuing to following the story, which I have to say that the share price did appreciate itself very much in the next past weeks and months. So thank you very much, Jack.
Thank you. Take care.